All right, this is John, and thanks for joining me. This is probably going to be lesson 15 or 20 or something like that. But I'm going to do this video because this just happened last Friday, December 27th, 2024, and I wanted to go over it while it's fresh on my mind. But this still does, apply to lessons that I will be teaching in very very soon videos that I'm going to make talking about how to do this, from the very beginning. So let's get started. When price action hits the daily levels such as the mid-Bollinger Band, mid-BB, you should take this as a technical signal that a big trade can happen the next day, okay? So what I'm talking about is, this is a daily chart of SPY, and this is the move I'm going to talk about, but this is what happens on Thursday, which is this is Tuesday, Christmas Eve. No trading on Christmas Day, and this is the 26th. So not too much happened here, except that it bounced off of, went down as low as the daily 9, and then came up, went as high as above the mid-Bollinger Band, and then closed right on the mid-Bollinger Band. Okay, so that's. And let's look at the after hours picture in a second here, but that's significant, okay? Or it's a possible significant sign here. So after hours on the 26th, this is what it looked like. So right here is the level, the price of the daily mid-Bollinger Band at 106.32. And as you can see, market closed just below this level. After hours, it shoots up here for a second, rejects it. This is like pre-market high, and then it stays down, tries to obey it, and then comes up, and then there's a bunch of sellers right here that will not let SPY go back above the daily mid-Bollinger Band level. Okay, 601.32. And let's go back real quick just to point this out here. I get that level right here. This is the daily mid-Bollinger Band right here. And 601.32 is right there. That's why I marked it right there. And so this is rejecting that level. And I went fishing on this day. So I didn't trade this. And then I didn't check this chart until the morning of the 27th when I was going fishing. So let's continue on here. Main thing, you rejected, the price went up to this mid-Bollinger Band level and then got rejected pretty hard, came up here and then began to fade. So this could be the signal of a potential big move on Friday. And Friday is always a good trading day anyway. So I get up, turn on the computer just to update some lines just for the heck of it. And this is what I see. I see this rejection here, and I'm seeing this thing fade, and I'm like, oh my goodness. Here's a low of pre-market while I'm looking at it. This is Pacific Standard Time, so really it's like 5:45 in the morning here in East Coast time, and I'm about to go fishing. Misspelt the SPY here by accident, but anyway, let's see what happens next. So my mindset would be to trade SPY short. Okay, so right before the market opens, a few things happen. SPY makes a new pre-market low right before the open. SPY breaks the daily low from the day before. And what that means, if we can go back here real quick, on this day here, where SPY open, went down, hit this level, and went right back up. That's the same level as the 9 EMA and the daily level. That's the daily low here, and here's the daily high, okay? So when I say it's breaking below, when it opens below the 9 EMA and the daily low, that's what we're talking about. This candle, that's the low of the day, that's the high of the day, okay? So the daily low, okay? So let's go back. 5-minute mid Bollinger Band is trending down. Everything on this chart says we're going short. The biggest question is, where do I enter to go short so I can manage risk? And the answer comes from knowing the setups and reading price action, okay? So let's look at the SPY chart first. And we'll talk about all of these things here, okay? So, one, right before the open, look at 5:45. This thing just begins to crash, and right before the open, you know, it's making new pre-market lows. It breaks the daily 9 here and the daily low here, and so when it opens, it fires down as well with it looks like a million shares right off the bat of trying to take a short. And where do we enter? So anyway, basically the 5-minute chart says we're trending down. 9 EMA says we're trending down. Okay. If you look at the 2-minute chart, let's see. This is the 2-minute chart. Here's the 2-minute chart of SPY. The 2-minute mid Bollinger Band is short. The 9 EMA is short. And we get this price action going down before it begins to come back up. And this is where we're going to enter our trade to go short. But let's go back a little bit and take a look what's going on here. We'll talk about some of this stuff. So you'd want to look at the option chains. The option chain chart is really the most important thing to watch when day trading SPY, based upon my experience. Your earliest trade, if you make one, should always be around 6:45 a.m. if you're going to make one. But there's a couple things that must happen in order to have a high probability of this trade working out for you. Is one, the 2-minute 9 EMA is trending down, and price action hits that level and begins to reject it and go down even more. Okay, so in this case, since SPY is gapping down from yesterday's red to green level, calls are going to lose value quite a bit. And the 2-minute 9 EMA and the 2-minute mid Bollinger Band are going to be falling sometime at the open. And when they catch up to price action, oftentimes they'll push price action down even further, okay? So we'll see that in just a second. So after it opens, even before it opens, you should be pulling up charts. But, if you can't really figure out, which charts to pull up based upon a gap down and things like that, we'll talk about that in future videos. But you still have 15 minutes after the open before you're going to make your first trade, because if your first trade is at 6:45, which is 9:45 Eastern Standard Time, and the market opens at 9:30, you have 15 minutes. So you have to be good at understanding how to use your software and to pull up the right option chain to trade. Okay. So we're going to look at like 6 different option chains, but you should be watching at least 3 of them. And they're all pretty much going to tell you the same thing, but I believe the higher price options are going to give you better price action to enter, okay? The setup that you were going to use would be the 645 trade with price action, retesting the 2-minute 9 EMA and rejecting it and making lower lows, okay? So number 3, find a cheap option that you can trade, that you can manage your risk. A couple other things that you're thinking about, if you're trading off a daily level, you have to have it in your mind that this could be a huge day. And there's other things that indicate that it could be a huge day too, and we'll talk about that more at the end of this video. But if you know it could be a big day, then finding cheaper options, like the low of one being the low of day of 26 cents, so by the time you enter it's about 30-40 cents, would be a good start, instead of finding one that trading between 40 and 60 cents is what we normally do. So, and you might want to think about holding your first position, if you can, for almost 45 minutes from your entry. Your entry is at 6:45, and you want to try to maybe possibly hold it to 7:30 based upon what you see, or at least exit maybe one to lock in some profits and try to hold the other 2 as long as possible. So first of all, let's look at some of the 6 OC charts that I want to show you. Let's see. Okay, this might show SPY first. Okay, this is the entry on SPY on the 2-minute mid-Bollinger Band. We always try to enter trades at the green and blue on the 5-minute and the 2-minute chart. Enter green and blue on the 5 and 2. So as you can see here, price action is open, drop down, it's come back up, it's rejecting the 2-minute mid-Bollinger Band here, and it's coming down. As price action comes, it tries to hit this 9. I think before I used to enter here just watching SPY, but I'd get stopped out, and then I'd get stopped out again and screw me up. But there's a better way to trade this, a more accurate way to trade, and let's talk about that very soon here. Here's a 5-minute 5-minute time frame of SPY, and you can see this is getting a little bit above the 5-minute 9 here, and then rejecting the 5-minute 9 EMA before it goes down. And oftentimes you'll see this when you have price action to the 2-minute mid-Bollinger Band on SPY or on the OC charts. You're also going to get good price action to the 5-minute 9 EMA oftentimes, okay? So let's continue on. So let's look at the 6 different OC charts here. And they're all sort of telling the same story of when to enter, okay? Options, these call options closed yesterday around $2, and today they're opening at 36 cents. So if you were a holder of these options from the day before, you would have lost probably, 75% of your value overnight. So, which is one of the biggest reasons why I do not hold options overnight unless they're super cheap. And we could talk about that in another video, and I'll try to, make that video happen. But to continue on, price action opens. These are the calls. They've lost a ton of value, so they're struggling to gain value, and they're not losing much value either. But you see this price action goes right to the 9 here, and then rejects. And this is on the 600s. The 601, sort of the same thing. They sort of back and forth, they get to the 9, and they fall off. And these are the cheaper options. And I would often miss this watching these cheaper ones, because we're not getting quite to the 9 and I want to get to the 9 before I trade. And the more expensive ones are getting almost there, but I would end up missing it, oftentimes. So here's what some of the more expensive options look like. And here, these are the 598s, 596s, and 597s. So it'd be 96, 97, and 98s over here. These are $2.40, $1.74, and $1.20. So let's look at these first. The $1.20s, we know we don't want to buy these, but we want to use this green and blue as indicators to enter trades that go short. And you can see decent entry here at, green here, because we entered at the green and blue on the 5 and 2. So this setup, you're entering at around 645 on the green if it retests and then rejects. Retests and then begins to reject. Retest and then begins to reject, okay? We want to enter as close as we can to this line here, because if we get price action above it, we probably would want to stop out, because it could then just go ballistic straight up, or it could hit here and come down. But we want to stop out, with candles that go wicks and candles that close above this. Definitely you need to get out. Maybe a wick or two you might be able to hold it, but any several candles above this level you need to get out of your trade. But this is weak. Okay. So let's go over that real quick. We'll go over it again on another slide, but I'm gonna mention this. If this is signaling our level to enter the trade on the calls, we're buying puts, okay? You should have, as you're watching these more expensive options, you're actually trading the puts that, have a low day of, 25 cents, 20 cents to 30 cents. So by the time you enter, they might be 30, 35, 40 cents, okay? So setups that happen on the 2-minute chart on a weaker option chain chart. So like you just saw, price action rejects the 2-minute 9 EMA on the weaker option chain chart around 645. The weaker side is the call options, so we should be buying puts because we think SPY is going to go down. So if the calls are losing value, puts are going to be increasing in value, are going to be going up in value, okay? Use the call chart as signal to enter, not the put chart, okay? So you should enter one contract at a time. If your position is 3 to 5 contracts, one, so you don't miss it, and 2, you can sort of build into it a little bit, but you want to enter as much as you can of your full position size near the green line, okay? At 6:58, the candle is near low of day, and everything says it's going down. So that when the 7 a.m. candle opens, it could be an explosive move down, which is what happens. And everything looks like it's going to go down. There is nothing at all about any of the charts that said SPY will at 7 o'clock shoot up. And it could happen, but not in this scenario. Well, it could happen, period, but it did not happen in this scenario. We'll leave it at that. Let's see, 7 a.m. Candle breaks the low of day hard, and there's no price action over the 2-minute 9 EMA. So no indications that the price was going to go up. So let's look at this. So as on the 2-minute chart, as price starts getting up closer to this is when you want to start entering your trade, and no price above this. This is probably not the best one to watch because we don't even get a touch here, the 9 EMA here. But let's go back here, and this gets a little bit closer. Yeah, this is the ones we were watching. So maybe the 120s, 74. Yeah, doesn't quite get there, but we do get the rejection here. Okay. No lines above the 2-minute 9 EMA. And then here's low of day here. And this looks weak. This candle opens up. And this candle's like way up here. Above $2. Possible entries around a 9. 90, 192, 190. But as soon as this opens up, this average drops down fast and it breaks low of day really quick, and then it continues to go down. And you can tell this is a 7 o'clock high, the 7 o'clock candle. It opens, comes up a little bit, and then just gets shot down. And then this is the chart we should be trading. Okay, and then if you look at here, this tells you, actually let's go back over here. This is the chart you should be trading, and this is actually a little note on the side here, a different sort of, just educate you. We're going to be trading the 594 puts because those were the good ones that are good priced. But if you look at the option chain, the identifier, it's this whole number here, which is .SPY 24 12 27 P94s, and this is what it is too, but I put spaces here to help you understand what it means. A dot here means options, a dot plus a symbol here. The symbol we're trading is SPY here, okay? 24 means 2024, the year. 12 means December. 27 means the day of the month. P means puts. And 594 means the strike price, okay? So you're basically trading the 594 puts on the day it expires, which is 12/27 of 2024, SPY put options 594s, okay? So anyway, that's how they describe it. So here's the option chain. So the option chain, it closed down here probably about 8 cents maybe the day before. The next day it opens up 26 cents, so it's opened up 200% profit. But these are just beginning to go up even more here. It shoots up quickly, comes back down, and then you should be trying to enter a trade down through here. This is a 644, 645, 46, and the low is 33. So hopefully you can get in 1, 2, 3, 4, through around here, and hopefully your stop is below 33. Okay, so hopefully you're entering it. Here's 41 here at, around this level here. So hopefully you're entering here. Stop is below 33 because there's some price action below the 9 here, which doesn't look good. But if you're entering on the 2-minute 9 EMA, it looks great. But here you have nice price action at green or blue on the 5 and 2. So this is indication of entry on the blue on the 5 on the 2. Okay, 2-minute chart blue, and this is where we enter. And since this is going up, we will be buying options here. So right before it opens, the 7 o'clock opens, you could add, 1 or 2 more, and then if you're really quick, you could stop out below this level if it, drops down. But, if you get, the risk is that on a spike down, you're not going to get filled at 33, 34. You're probably going to get filled at 26 or 21 because of the volatility. But if you're right, and this goes up, this is going to go, you're going to enter in, 41, 42, 43, 44, and it's instantly going to, go 50% profit on you in, in 10, 15 seconds, So let's take a look at that. Maybe the next one here. Let's see. One of the most important things to recognize here is that you are above the highest moving average on the 2-minute chart, which is the red line. So we'll talk about this real quick. When you're above the highest moving average here, there is no moving average, no other lines above here that are the moving average. So price action can really take off. This is another hint that you can have a really big move that day, is that there are no moving averages and you're already above the highest moving average and you're just waiting for support for the green or the blue to push price action up and through. Okay, so that's another way you can tell you might have a big move up, trading short that day, which means the put options are going to go up in value this day. So we're going to talk about the second trade, which I call the 10-minute trade, and the entries are going to be at 7:22:24, and the profit should be taken between 7:30 and 7:34. So it's a 10-minute trade. Okay, so this is 9:22, 9:24 Eastern Standard Time. You're taking profit at 10:30 to 10:34 Eastern Standard Time. Okay, so but before we talk about that, we'll look at the profit you would have generated had you entered in right before 7 o'clock here. Actually, no, this is not the right chart to look at that. So scratch that. We're going to just talk about your entries on the 7:22. So you're breaking the low a day here at 7:16. You're coming up here a little bit, and then at 7:32:33, you're breaking lower days, taking profit here. But your first drop on that would probably be here. It comes up. Actually, let's see, at 7:02. It's a big drop. It catches up a little bit, then drops again. Now, you're sort of stuck until you get to the 7:22:23, 7:22:24 area. This is the low of the 7 o'clock candle right here. So if you get price action up to this level, then this is a good place to trade. It would be really nice if the 9 EMA was right here to trade, but it's not. So, hopefully you just take one or two here, and then maybe enter more here as this one opens. It closes here, opens, rejects this, and starts coming back down. So your entry is probably right about here, but your stop would be above the arrow here. Okay, and then you're going to take profit at low of day, break of low of day, and then a little bit harder break of low of day. Okay, so if you hopefully you entered one here, entered maybe one or two here, stop here, and then you're going to take profit here and here. Okay, so the next possible trade is going to be a retest of the 5-minute 9 EMA 30 minutes later. This is also a 10-minute setup, but it's going to be on the is it the 22:24? Probably, or 52:54. So yeah, it's going to be 52. So as you're well established into the trade, you're already an hour into it, and you lost a ton of value because these were, the 596s were way up by $2, and now they're worth like 39 cents. You're going to get a pullback to the next entry of the weaker. The weaker chart is what we always use for entries, period. And you get a close retest of the 5-minute 9 here, entering trades on the green and blue on the 5 and 2. And because this is coming down, what are we doing? These are calls, so we never buy options that are going down in value. We buy the opposite side, which are the puts that are increasing in value. And you're going to enter here, and you're going to take profit at low a day, which is here. here or here, and then on the break of lower day, which is here, you know. So let's take a look at, maybe try to get another better picture of that. Here's the next trade right here, that 752.54 area right here. You can see 54 here, and then it comes down in value, and you can take profit at 39. Well, when it comes down and breaks lower day, and then another lower day. So you're pretty much out of the trade here if it's a 10-minute trade by 8 o'clock, 8:04. Okay, you might hold a little bit. Maybe you can hold it because it rejects this 9. If it goes above the 9, you got to get out. But goes out a little bit lower, maybe get out. But this trade is sort of exhausted right now. So let's look again. This is the 1-minute chart of this, and this is just to show you that the 10-minute chart, you're entering in at 52.54. So somewhere around this area you're entering in, and anything above this you have to get out. Okay, but you're hoping that 752.54 at the retest. This one's a little bit higher. You're retesting this time the high of the 2-minute upper Bollinger Band, but you're not really using green or blue on the 2 here. You're using green on the 5-minute chart on calls, which is a pretty good trade to make. Okay, so entering there on the 5-minute chart, this is what it looks like on the 2-minute chart, and this is what it looks like on the 1-minute chart. So if you're waiting to 52.54 here to enter, you're entering here at the top, and it's beginning to lose value and coming back down. Okay, so remember that 52.54. So let's actually look at the put chart and see how much money we've made. The one that we first started off at with the low day of 26 cents is the puts, 594 puts, okay? But we probably won't take second and third trades off this chart. We'll have to look at a cheaper one, okay? So let's see here. I don't want to look at the 5-minute chart. It would be nice to look at. Okay, let's just look at this chart. So hopefully we enter trades at 33 cents, and that first move at the candle made this thing jump up to $1. That first 2 minutes, first 5 minutes. After you entered here at 40, it went up to $1, so you doubled your money in 5 minutes. And if you were able to wait to 7:30, if you were to get in at the low, which is 26 cents, that's where I'm measuring it, this would have been a 700% return in 5, 10, 15, minutes of that. But it's still a couple 100%, in 15 minutes if you entered in at 33 to 43, okay? This is your second trade. This is your first continuation trade at 27.22.24. Your second continuation trade at 7.54, taking profit at 8 o'clock, 8:05, and hopefully you didn't give back your profit here. And then this would be another trade off of the mid Bollinger Band, I believe. But right now we're going to talk about this trade right here, the 7.52.54 trade, I believe. But when we're making this trade here, you are getting a nice entry on green and blue on the 5-minute chart. So blue on the 5-minute chart, okay? And then it comes up a little bit for about 100% and then rejects, and then you get this trade down here. Let's see, let's move forward here. Let's see, we're gonna have to use this later on. We'll talk about that note. So these options here are very expensive. If you're trading these are $1.17, and I know we're usually trying to trade between 40 and 60 cents, okay? So if you can't manage your risk on $1.17, because I mean, you look at this was as high as 269, and in 20 minutes it dropped, you know, I don't know, more than 50% of its value. It's moving very fast. So you can get back a lot of your money and lose money by trading these higher price options. But if you get a solid entry on a blue here and you want to take this trade, 752.54 trade, you want to look at a cheaper option, okay? So let's see if we can find another option. So suggest trading lower price options to manage risk. You know, the entry times are the same, but the options you trade are less risky because they're cheaper. Trading the expensive options, you'll lose much of your buying power. If you're trading a cash account and you take this trade, you know, and there are 100 and, you know, they're 100 and 1,700, you know, $5 to get into this trade per contract. You know, you get 3 contracts, you're, you know, using up, you know, over $300 in buying power. So if you have a small account, you're going to use up quite a bit. So if you want to manage that better, then you're going to trade a lower price option. But you know, you have to sort of weigh that out. You know, how much money you want to make, how much money you want to risk. Okay. So if we were to pull up cheaper options, we would be entering in at the same time the 52.54 area right here, 752, 754, and we're holding to 8 o'clock, a little bit past 8, and then you really don't get much more value from that on these cheaper options here. You still made 100% here, and I believe if you took these, yeah, you probably see, okay, we'll go back here. If you bought the ones that we were looking at, the 113s, you're still going to make 100% on your money on what you risked. Okay, so, you know, if you were to trade these and you only bought 2 options, 2 contracts, you're risking $106 and you're making a little bit over 100%. If you're trading these options and you only bought 1 contract, you're risking $113 and you're making a little bit over 100% right here if you held that long. But we'd probably hold to about here, the 802, 804 area, for almost 100%. So, you know, it all depends on how you know, they're going to move around the same price. But it all depends on how you want to manage risk, okay? So, let's see. We're coming towards the end here, but this is sort of one other hint on how we know it's going to be a big move to the downside, okay? Because everything on SPY we talked about, the daily chart, the pre-market chart, the open, the 2-minute 90 MA, retest and rejection of that, that's all saying short, you know, short on SPY, losing value on calls, which means puts are going to go up, okay? So this price action above the highest moving average is a good indication of that, and that's a different setup we have. And you can look at it, you know, try to find it, or maybe I'll have to try to create another video of it. But I do have a Google presentation file that's called OC price action above the highest moving average, and it should have quite a few examples of this setup we're talking about, okay? So basically what it is that this is red line is the highest moving average, because we have red, yellow, purple. Okay, purple's 50, yellow is 100, red is 200, and price action above the highest moving average means that there are no moving averages to stop from the price from breaking through them and going higher. So it can move up and then it can explode up even higher through here. So, I mean, you know, later on it's like a 1200% return. If you were to buy it at the open and just held it all the way up, you know, it's like a 1200% return. Now, as the price action goes above the highest moving average on the 2-minute chart, you do have to look at the 5-minute chart for possible resistance, okay? So if you're entering in at, 42-ish, 43, you want to look at quickly at the 5-minute chart and to see where the 5-minute 200 is. And you can see it shoots up, holds, closes, opens, here goes down a little bit, and fires up. Actually, it opens here, goes down, fires up, close to here, and then rejects and comes right back down. And then, so that's close to the 5-minute 200. And then the next candle opens and it fires up, wicks through that, and the next time it goes up even higher. And then it comes back, finds support here at the 9, and then goes up even higher. But these are pretty fast moves. But this is a resistant level. And so here you come back, you get a nice retest here, and this is the one I would probably try to, load up on a little bit more, because if I can get price action back above here, this could go shooting up here further, but it doesn't. You gain some money. Retest here comes a little bit lower, and then this one finally breaks higher and goes all the way up to 1200% from a return all the way down here. So if you would have held on to, if you were able to get in at the very low, actually let's say 33. 33, the highest is 353. So if 353 minus $33 is $320. If you were to able to get into 3 contracts here at around 33 the low and you held it all the way to the top, that would be times 320 times 3 would be $960 if you're able to, get out at the very top. So that's huge return. But this is, I don't think most people could be mentally strong enough to handle the psychological moves up and down on your account, because here you're going to be up, $750 at this point right here, and as it comes back down to here, that 750 now turns into 117 times 3, $351. So if you don't take profit, up here, at all, I mean, you held the whole thing, never took profit, you'd be up like 750. Then you would give back over half of your profit, and then you'd go back up, almost up to 750, and you get back more of your profit, and even a little bit more before it rips up, and you can exit out at a 1200% return. That is the psychology of going up and down with that much money. If you're not used to it, will wreck you. FYI. So, think about that. That's pretty tough. So anyway, that's it. Hope that makes sense. Sort of a long video, but man, I'm telling you, you have to watch this video 5 times because there's so much information packed in this video. You have to watch it over and over and over again and listen to what I'm saying. And I'm repeating the same story every day, every time. You're entering on the green and blue on the 5 and 2. Alright, that's it. Bye-bye.